Hi, welcome to the Market Alert for Monday, the 20th of June 2022. So let's go brand Dow. Industrial stock slumped to worst streak ever, and consumer sentiment is at record low. If you're wondering about the play on words here, brand Dow, if you go to Wikipedia, have a look at this. I'll just leave this up on the screen. If you pause the video, you can read about the play on words here. It's a political statement under the Biden administration. And other news, JPM, head of trading, Fed willing to crash stocks to hammer inflation, but Republican win setups for end of year rally. We'll wait and see about that. Brits suffer pay cut as inflation outpaces wage growth. Yes, we've got lots of strikes coming on the railways, and I imagine that's going to certainly extend to other public sector bodies as well, such as teachers, etc. Which probably helps explain why the UK Misery Index is its highest since 1992. Absolutely. Janet Yellen, the lingering legacy of a decade's old monetary policy freak show. I couldn't agree more. Said that when she was elected all those years ago. Yellen has exemplified the worst of monetary policy over the last decade. Yep, she certainly has. And here's the best combined explanation for surging inflation, cascading idiocy, a timeline to see how inflation started and escalated and the absurd excuses. Well worth a look at. And this meme to the left here sums it all up. Let me just make this a bit larger for you. It says the facts are that gas prices have been rising since Biden got into office, well before Russia invaded Ukraine. And this is the mantra that they keep putting out, isn't it? And this is this bit here. It's worth a shot. Let's see if we can fool the public. All Putin's fault. I'm doing a great job. And in fact, a few months ago, I covered this in the Market Alert, where since the invasion of Ukraine, the interest rates have gone up about 2% max. All the rest of it was factored in from last year with the QE and the stimmy checks that came as a result of the COVID pandemic. US rents cost surge to record highs as Americans expect inflation to get worse. Absolutely, it's going to. And housing crash imminent as mortgage price cuts soar and buyer demand collapses. That's coming to the UK too. News for the rest of the week. Well, let's start off with today. We've got the criminal out at 2 p.m. There is no news prior to this. Then we've got a bank holiday in the US again. The banks are shut, bonds are shut, but the rest of the market is open. Lagarde's coming out again at 4 p.m. Blimey, twice in one day there. And FOMC member Bullard is also speaking. And later in the week, it gets very interesting, particularly for the UK. We've got the CPI on Wednesday. This is forecast to have increased by 0.1%. That's a year-on-year basis, unlike the US that do it month by month. Powell is going to be testifying in front of the Senate as well on Wednesday, and he's also out on Thursday as well. We got all of the flash on Wednesday as well, and then on Friday we've just got one Fed member speaking, and that's going to be Bullard. And just before we get into the charts, let's just have a look at the dollar index. This was up on Friday, down on the overnight. The gold-silver ratio still stuck in the sideways range at 84 at the moment, but off the highs. Silver moving up on the overnight. And also, while I'm thinking about it, if you've not seen this in the members section of the website, then go and take a look. Shows the last 6 months results from trading the German DAX and the odd trade or two in the Dow Jones as well. But let's move on and have a look at Friday's activity in the markets. And starting off with the Dow, you can see that we got some buying pressure coming into the market there on Friday with a huge volume, narrow range. But this is not holding the market overnight at the moment. This low is very important in the Dow. If taken out, we'll see prices continue to move lower. At the moment, we're back below the 30,000 psychological level as well. It tried to hold on Friday, if we have a look once more at that 30,050, but the markets, you see it came back and then it was smashed back down. We started off down, they brought it back, and then in the end, overnight, we're seeing the market now back below the 30,000 level. So a bit of a volatile day on Friday. As you can see, we sold off and then they brought the market racing back, and then they reversed it in the next half an hour back to the low, and then there we're oversold, and we get a crossover and they bring the market back. Very choppy though during Friday, as they were desperate to keep the market above the 30,000 level, which is this line here. And now the market is failing to hold. Actually, I think it's this line here, isn't it? There we go. Yeah, sorry, it's this one here. So, yeah, again, you can see it's broken it overnight, and now it is moving to the downside. So watch that 30,000 level if they attempt to bring the market back above the daily pivot from Friday. And in the German DAX, we're seeing a similar picture there. We've got demand. We're oversold as well. We're actually just at the 13,000 psychological level for the German DAX, but again you can see prices are down overnight. You need to watch for Thursday's low of 12,968. If this is taken out, prices are likely to move lower as well. Here's Friday's. We saw the move up in the futures, and then the cash market opened, and the market was brought down again, choppy given the sell-off that we saw during Thursday's session. So the market then rebounding to becoming overbought at the DP, and then back down with the Dow, and then back up with the Dow. Overnight, we see the market gap. We've got a gap there that hasn't been filled yet. The market's traded down to the low seen in the early evening of Friday, late afternoon Friday, and trading up to the DP and not holding there at the moment. So what we're looking for is the market, if it's going to retrace, to hold at the 62 would be useful, and also 78 and 89 as well, because if this low is taken out here, then we'll head down towards the low as well. Only time will tell. Let's have a look at this in a smaller time scale in the 5-minute chart. You can see the gap we've got here. Normally they are filled. The market became oversold overnight, so you can see the retracements in there, and at the moment the market is again oversold and trying to move back to the upside there. Friday's session in a bit more detail. You can see that the market was moving up nicely until 7 a.m. The market was slammed. They managed to bring it back towards the 20 bar moving average, and then it was down to the 200 MA overbought, and the cash market opening, and then putting in this bar here where it shook out. It was a divergence, and then they brought the market back, which you can see there, and it was just a play to the upside with a few small pullbacks, and the DP offering resistance there. Interestingly enough as well, you'll see prices being brought back to the obviously keeping above the 13,000 as well. And then through the mid-morning we see again some divergence in the stochastics, and then the market waiting and trading down, waiting for the Dow to open at 230, which you'll see in this area here. Prices moving up with the Dow and then back down, but fairly quiet afternoon and session as we've seen, and overnight prices just stuck in a bit of a range. The volatility seems to have dropped off at this time. And in the Dow, similar picture. Again, we've got a cluster of volume. We're oversold. We could do with a bit of a dead cat bounce here. Got divergence, and like the Dow and also the DAX, just sitting sideways on the overnight at the moment. Friday's low is going to be crucial. That's at 36.36, and look at that in a bit more detail. You can see the low there, and you want to be mindful of this should the S&P or the Dow move lower. Friday's low is going to be important because of the sell-off we've seen all of last week. At the moment, the S&P is sitting at the DP level, the break below this. Again, you'll want to mark up the fib retracements, and again keep an eye on those lower numbers of 78 and 89 and 62 as well. As long as the market holds there, you could get a bit of a bounce back to the DP area there. But in the bigger picture of these markets, they're all oversold at the moment and due for a bit of a bounce. In the FTSE 100, you can see that the market's currently trading below 7,000 as well, 6,992. That's overnight. This one's actually already breached Friday's low, which you can see there, and they're doing whatever they can at the moment to bring it back. So the FTSE's already had a shakeout. You see demand there having broken the low. It's oversold and now trying to bring it back there as well. In the weekly charts of the FTSE, you can see that we're close to the 200 MA. Last week shows demand for the week as well, a lot more volume. Very important levels here as well, because if you draw in the fib retracements as well, you'll see we have a 78% retracement. So 6960 is a major support area for the FTSE. In the currencies, JPY, you'll see there that we had a rally on Friday, market moving up as the dollar also started to decline, and there you'll see the market at just through the 62 there and 78. Overnight, not a lot happening, just fairly quiet. And there you can see the market moving strongly during Friday. And you'll see it became overbought with divergence, and then switched and has been in a sideways range since. Overnight, just like the stock markets at the moment, trying to get above or stay above in the yen's case of the DP there. We came off the demand overnight, and the prices have moved up slightly there, but like I say, still fairly quiet. The pound also having moved back with the rate increase of Thursday last week. This too between the 62 and 78, holding at the 5-bar moving average, also coming off an oversold situation from last week, but starting to give cause for concern, because we've got the lower high there as well. In the 30-minute charts, saw on Friday coming off the DP in the 30-minute chart with demand trading up, becoming more or less overbought. Your retracement in there, then cascading back down, climatic volume to oversold retracement, and then overnight the market has been trading in a sideways move and just trading up to the DP, the same as the stock market. So similar picture really, everything trying to bounce after last week's moves to the downside. Monthly pound coming off that 123.48 level that we saw last week, and maintaining that at the moment. And finally, in the metals markets, silver sitting sideways at the moment, not doing a great deal. It's holding though, which I was quite expecting a straight reversal off Wednesday's price action there. Thursday managing to hold, and Friday as well, despite the fact that it would close lower than Thursday. So we'll look at it in more detail in the 30-minute chart. Here's the sell-off. This came in at the 2:30. We had the fix at 1 p.m. and then 2:30 they brought the market down. Surprise, surprise. Overnight also, they brought the market back to 21.50, where there's been, again, a cluster of stopping volume with some demand there bringing the market back, but we're already starting to turn over. If we've tested this level already, I expect it to be tested again today, unless the dollar continues to slide, of course. Gold looking at a similar picture as well, sideways to higher there, needs to get back above that 200 MA in the daily chart to continue higher. And in the 30-minute, exactly the same, 2:30 last week when the Dow opened, the sell-off came in both gold and silver. Overnight, like I say, the market's managing to move higher, but currently trading back below the DP for both of the metals there. Okay, that's it for this one. Like I say, an interesting week. CPI tomorrow and Powell for 2 days in front of the Senate on Wednesday and Thursday. Right, that's it. As ever, thanks for watching. See you in the next